Slack could have a value of up to $17 billion. You've literally been all over this. It's going to IPO next week. What is the conversation around Slack right now?
Sure. So Slack is going public via a direct listing. That's not a model that's heavily proven yet. So Spotify did it last year. Spotify opened and closed about 12% lower than it opened.
So what does direct listing mean for the people who might not know?
So direct listing, and this is exactly right. A lot of people don't know what it is. A direct listing is when you just go public. You're not raising money beforehand, and so you're not setting a price the night before. And so the morning of a direct listing, the banks, Citadel Securities, and stock exchange, the investors are all sitting there hustling to figure out what the right price will be and how much supply and demand there will be for the shares. And right now, honestly, this year is much more volatile than this time last year. And so there's a lot of risks embedded. They tend to be a lot more volatile than a traditional IPO. Spotify, people said it did all right. It wasn't as volatile as people expected, but we'll see what happens with Slack this time around.
If Slack does go out and raise 16, 17, goes out of a valuation of 16, 17 billion, how does that compare to the valuation of the last funding round?
So the last funding round was around 7-8 billion. So
that's a big step up.
It's a big step up. It's certainly a big step up, but it's around in line where it's trading now in private markets. What people tell me is that it is very, the private markets are pretty advanced nowadays, so it's not so surprising that private investors have bid up the stock. The question is, can it maintain that valuation? It's 20 times a forward revenue multiple that's assuming a 50% growth rate. Growth has already been declining year over year, and the last growth rate for the last year was about 50%. And so it'll be on the company to keep that up to maintain that valuation.
Well, what's the benefit of the direct listing? Like, how does it help Slack?
I think of it as very Silicon Valley.
You guys laughing at me?
Well, no.
No. One benefit you save a lot in bankers' fees. There's one
yes.
thing.
Well, yeah, that's for
lots
sure.
of money in bankers' fees.
The funny thing about the fees, well, I also call it the democratization of Silicon, the markets a little bit here, because they want people the market to set the price, not the banks to set the price. So there are a lot fewer banks on direct listings. The fees in aggregate are lower, but the top 3 banks, which have been the same banks this time around as the last time around, Goldman, Morgan Stanley, and Allen, share most of those fees. And so they actually get a bigger share of a smaller pie. So fewer people win. This time around last year, people were really nervous about this eating away at the IPO model.